It's not quite 50%, but as you can see from the slide, 37% of parents with children under 18, meaning they have little ones, don't have life insurance.
If you are no longer here to provide, the insurance policy in place is supposed to step in and provide for your loved ones. So in addition to income replacement or replacing a role that someone might play inside the home, it can also serve as a tool and a mechanism to pay off debt. We never know when we're going to breathe our last breath. And the last thing we want to do is have our family not only having to deal with the emotional turmoil, the difficulty of losing a loved one, but also then all of the financial burden that comes along with that. And life insurance is a very effective and cost-effective way to remove that risk from our financial situation. So when we think about life insurance, there are really predominantly two types. Even though they get packaged a number of different ways, there are two main types of insurance. The first is just called term insurance, and the second is called permanent insurance. And they sound exactly like what their name suggests. Term life insurance offers pure insurance coverage for a specific period of time, whereas permanent life insurance, the intent behind that is that it will be in place for the remainder of your life. So one is temporal or temporary, that's the term, and one is permanent, planned on being there. When you pass away, the insurance policy will pay out.
Now, I'm going to play devil's advocate because I know if I'm a person that sells life insurance, I'm going to take advantage of this stat I heard that 99% of term life insurance doesn't pay out.
Yeah, it expires worthless.
So aren't we in effect, if 99% of policies that are written that are term-based don't actually get paid out, isn't that just throwing money away, Bo?
Well, I guess technically, yes. If you think about it in that sense, from an ROI sense, yes, I'm spending money on something that I hope I never use, and I hope I never have to capitalize on. And yet, think about like logically how that plays out. Hey, I spent money on this term for 10 years, 15 years, 20 years, and guess what? I didn't die. That's a reason enough to celebrate.
That's actually a good thing.
It's okay to technically throw that money away because it did serve a purpose, even though you didn't receive a benefit from that life insurance.
Well, in a lot of ways, this is where it is somewhat similar to like when you insure items that you own, like a house or a car. I don't actually get frustrated that I didn't have a car accident last year. Actually, it's
super happy
yes,
about
I paid an insurance premium on that, but I'm glad that nobody in my family got in a car accident and actually needed to go replace a vehicle or something like that. So I think you're right about that. But it is one of those things. I want to build this foundation out a little bit more so people understand what they're dealing with.